Fine, I'm recording this session now. All right. Okay. Now I want to share my screen.
The individual recording is not necessary, right?
No, not at all.
Sir, yesterday's session, will you be posting
Yeah,
it on
it's
YouTube,
recorded.
sir?
Yeah, I'll be posting. I was too tied up today. A lot of things to come. So I've already converted it. It's reasonable size now, 450 MB or half a GB. So I'll be posting it.
Thanks, sir.
I guess YouTube is the only place I can post such a big file because I don't have that much. My Google Drive is also 98% full. So anyway, so I have just
Google Drive
listed. Sorry.
YouTube is perfect, Sarji.
Yeah. Okay, sir. So now I have listed out some scripts out here. You could name a couple more. We could add them, and just name one or two stocks more if you want. Anybody wants
Root mobile.
Root, okay.
IEX.
No, root mobile
Chennai.
won't be very useful. Root mobile won't be very useful because there's no history for that stock.
Yeah.
Available.
Chennai Petro.
Okay. No, only one or two. Huh? And which one?
IEX.
Rain. All right. IEX. Fine. Only this is enough, I think, for the time being. So now the normal market watch on Sharekhan will not have the script code. Okay, so to add the script code, you have to actually go, you right click on this bar, the labels on the top of the market watch. You right click here. Okay, right at the beginning. Here you have to create a blank market watch first, and then select local market watch. So you'll get an absolutely blank market watch. Now the default market watch in Sharekhan doesn't have script code on it. So what you'll have to do is right click, show column chooser, and then right at the bottom there is script code somewhere. Okay. So once you do that, it'll come right at the end. Can you mute, please? There's a lot of disturbance. So the script code, you can drag and drop it to wherever you want. Why we need the script code for automation. Okay. And you could remove whatever you don't. So now here, this is the way you, I'll fix the script code. So now I've already done it here. You get the script code and we'll need the script code as part of our file that we create for uploading. Okay, so now somebody said Chennai Petro. So let's see Chennai Petro. Open it. Now, can you tell me where the obvious buy zones are? See, visually, it should be very easy to do that. One is very obviously here, but it's not likely to, it's not going to be very useful right now because it's way too down. This is one buy. Okay. The other one.
89.
89.
89. This one?
No. The right side where there is a
Here, this one.
Feb, before Feb.
Yes, sir. Yes, sir.
Okay. This one, right? Yeah, so this is a pretty decent one, though it has not spiked up here.
It's spiked before
But
this.
it's
96.
yeah, it spiked
Yeah.
a little here. So this is the actual point where this setup. So it continues. Actually, this is the same set. It continues here, and then it's again touched here. Okay. So 89 is a very good buy zone for this script. All right, and it has been touched extremely regularly. So till such time the stock actually breaks out, you will find that these buy zones would be touched on several occasions. So it is between this and this. Yeah, something between 80, 87.5 and 90, 91, something of that sort. So now this is a very decent buy zone. All right. And it is just about 10 rupees less than what it is currently. So there is a chance that now the breakout has happened. So there is another, there would be another point somewhere here where this is a weak zone, this one out here. So in fact, it's immediately been broken. If you take this as just about these guys, if you take this particular candle, okay, then there was a nice breakout after that. So, and there was some consolidation and some. So this candle would have been a decent buy zone, which has again been touched here. So there's one more which is here, approximately here. It's not a very strong zone, but it's okay in the current kind of market. You may not, you definitely not reach here. You may not reach here. Okay, so you have a fairly nice pattern here: 95, 91, and 87. Okay. So I have this Excel sheet. I'll show you how to create this Excel sheet a little later. I'll just move this guy down. Now I'll create this one as CPC. And what were the rates? You'll have to remember these rates. Okay. There's
Actually, we don't
95.
see Excel, we still see the chart.
You can still see the chart, right? Oh, okay. I'll just get that sorted. Just a second. Now, can you see the Excel sheet?
Yes, sir.
Yeah. So this is a very simple Excel, and just calculating the how you set up the second last algo, second last price. So the average of this particular whatever we are doing, the average cost will always be the second lowest cost that you bought at. Okay, at any point of time, till however low or however down you go, the average cost is always going to be equal to the second lowest cost. So whenever the bounce back happens, you're quickly positive. So there's a simple formula for that. I'll explain it later. So now here we have 95, 91, and 87. Okay. So I just have to put it in this 95, 91, 87. And then if I want to go down in the same sequence, I can just drag it. Whatever level. Okay, so now if you see the average price is 93 here, it is 91. So the second just above that, the buy price was 91. So when you bought at 87, it averaged to 91. When you bought at 83, it averaged to 87. The average price was 87, which was the previous price. 79, the average was 83, and so on. 87, and then so this is the very simple Excel sheet. You just get this. Why this is important is because you should average down if the prices are going down. So even within the buy zone itself, you have a setup like this. I would buy not at one single price and put the entire amount in that point. I would buy in a staggered manner at every level that I see on the charts. Or I mean, I don't see on the charts, but what the algo tells me, and it will automatically, of course, put orders like this. So the same thing you are replicating using an Excel sheet. That's the only difference. But otherwise, there's no difference in what you are doing and what the app is right now. Okay, so you have CPCL, you have these levels for CPCL. Now I go to the upload screen. Okay, where is the, you can see this?
Yeah.
Okay. I would simply copy this. All right, now CPCL is 2049. I'm not wearing any specs. Just a second. Okay, so 2049 is the code. So what you will have to do is wait. $2049. You'll have to name it exactly the way Khan names it. Chen Petro. Sorry. This is, of course, to be done only once for all the companies that you want. You have to create this file once, and then you have those 4 levels of Chennai Petro, or 3 levels of Chennai Petro. 95, 91, 87, and here you have 95, 91, 87, and the quantities 83, 89. You could go down whatever level you want. It doesn't matter if the it doesn't matter at all if you're breaking the lower circuit limit or anything. The system will automatically reject it.
And sir, maybe I have missed it in the last session, but how are these buy quantities calculated?
That is calculated using the second lowest price. So the price into the quantity, the total invested amount is, of course, I'm not asking you to start at 1. I just simply start at 1 because the multiple is the easiest. That's the easiest thing to multiply.
Understood. Yeah.
So you could, depending on whatever your budget is, you could start at 10, 15, 100, 1,000, whatever. You just simply multiply all the rates, all the buy quantities by some multiple, according to whatever you wish. But it has to be in this sequence. Okay.
Okay. In this sequence. Okay. Okay.
Yeah. So now if you follow the sequence at any point of time, say take the third one, you bought Previously at 95, you bought 1. You bought 91, you bought 1. Now at 87, how many do you need to buy? So it will calculate on the basis of 91 into X. So whatever is the previous value into the sum plus what, I mean, you are going to buy something X into 87 right now, right? Where you don't know X.
Right. Okay.
Okay. But X into 87 should be equal to the sum of 95 into 1 plus 91 into 1. And 87 into X should be equal to 91 into 2 plus X. So that is the formula. I'll write it down here so that you can understand, I guess.
Yeah, this is the ceiling formula that you chose, right?
It is not the ceiling formula. It is actually the formula to calculate how this X quantity. Okay, so this is the formula.
Okay, can you just put it in the chat window? Maybe everyone will be able to then have a look at that.
Yeah, sure. In the chat window, where is the? Okay.
Asking that you can write on the Excel also. Just copy paste.
Yeah. Just put it on the column J. That's
Just
fine.
column here. Yes, and put mark dot here.
Oh, sorry.
Yeah, just put here and mark
Okay.
dot in the in front of equal to. Yeah,
I'll put this thing so that,
yeah. Thank you.
and I'll
Good.
make it bold. Okay. So, but what it means is that this into X, some quantity X. So 87 into X times X is equal to the sum of these quantities, this into this plus this into this. So should be equal to 95 into 1 plus 91 into 1. Sorry, here there should be a plus. Plus should be equal to 91 into, right now it is the sum of what you bought so far, that is 2. Okay, 2 plus that X amount, what which you don't know. So now if you solve this equation for X, you will get the formula for, you'll get the amount for X. Now it's already put in the formula. So as you see, it continues at 1 for 87. Then when you go down to 83, now your previous average was 91, right? The previous average is 91. This is the average price. This is the total invested. So right now the invested amount is 95 in the first row. Then it's 95 plus 91, so 186. Then it's 95 plus 91 plus 87. So this, and you have actually 1, 2, 3 shares. So 273 divided by 3 is 91. Which
Actually,
is
it is
your
buying the quantity which is enough to make it average to
average of the
last buy
second
price.
last
buy
but one. Yeah, the last one above that.
Yeah.
Okay, so this is what is called the second lowest method of buying. So we buy in a staggered manner so that you always remain just one step above the lowest price. Now, obviously, if you are able to buy at 87, the price has touched 87. So the little loss that you make is only 91 to 87. Okay, if you buy everything at 95, your entire quantity, then you might be stuck. There is always a chance. That's one thing. The other thing about this is when the bounce back happens, you quickly become positive. Okay, and since you are also going to sell based on some algorithm, your selling price will be reached faster. So you average out your entire this thing much faster. So these are some techniques, just and they are very simple. It's not some rocket science which is being used. Okay, it's very straightforward. It is just that you play safe all the time. Now the fun starts here. Okay. Now, once you do all this, this is a one-time exercise which everybody unfortunately will have to do. You don't have much of choice there. Now you can say up to 79. Suppose it could go. The lowest that you might find that it will go is here. Okay, now here we have Chennai Petro. I'm going to put these as the prices. Sorry, I'm going to have to paste it as a number. Okay, this has to be 0 always. Yes, sorry, what did I do? Okay, anyway, granules are not something that we need. But it's 1, 1, 1, 3, and 6, correct. Okay, these 3 you will have to copy till the end. Okay. Now this is going to be a buy. You limit all of this is the same. You don't have to, you just need to simply copy this. Okay. Now your file is, you have created your orders for Chennai Petro. In the same manner, you have to create your orders for maybe REC or Goldium or whatever you want to buy. I've created some orders and kept. This is some junk data from very long time ago. Okay, this is also not. This is also not. All right. So now once you finished with this, you save. Hello, can you hear me? You save this. I'll close it because, and now just see what fun. The fun starts here. You just say bulk upload. All right. You select this file. This is the file that we saved right now. This was the file. Okay. Select all and load. Sorry, select all and push order. That's it. You can put 150 orders like this in one file. Now you have 10 files, you put 1,500 orders. It will take you about 45 seconds right from start. So I will clear this. Just show it to you again what I did. I created that file, the order file. Okay. Then from from the order file, I just found my levels using this for simple formula. I created my order file. My order file is called SP order 3 right here. Okay, this is my order file. Now this format is specified by Sherka. Now many brokers do have an upload. That's what I have heard. Many of them do have this format where you can upload the file. If you want the format, you simply go to tools here, bulk order, and say generate, where you can clear that you can create a template. So when you click on template, it will give you this, the format in which it expects this file. Okay. All you have to do is load file, select that file from wherever you saved it. Here, this is the file I've saved. I open it. Oh, okay. It won't allow this. I have to close this. Yes, yes, yes. Okay. What you didn't see? Oh, sorry. All right. So you have this. You select NAC here. Now there is one BSE which is there in this file somewhere. There was a BSE. Okay, it selects only the NSE. The original file had one BSE. Now what is this error? Is for that granules. That's okay. You don't have to bother about any errors. It will manage. And you select NSE here. You select new here, and you just say push orders, and you'll get the success of the orders out. Okay, so that's it. Now, similarly, if you want BSC, you again will have to load that same file. You can load the same file for all the BSC orders.
Ashwin sir, there was an error in the previous screen. If you look at the second last row below Golden, yes.
Yeah. This is because of granules. I think the number is incorrect. Oh, this is not all right. This is BSC. No. This is Bajaj Steel. Okay. Let me just check. I think I made a mistake in the. Okay, this is BSC because of this. All right. It's not a NSE script, right? Bajaj Steel is only on BSC.
Script code is.
So that's what it doesn't matter. No. The script code is correct. Only thing is the stock is not listed on NSE. So now you get only Bajaj Steel, right? So you select new push order. That one order is pushed. So this is all that it takes. So it doesn't matter if you are supposed to do this kind of stuff manually for each place 1 1 2 2 5 5 10 10 stock. I mean shares every day. And day in day every single day, if you are supposed to put something like 200 or 300 orders, it's not possible without automation, right? So you might end up buying in bulk or doing something like that just because of those limitations. So there are tools which you can use, which are very simple to use. There's nothing. We have not done any programming out here. Nothing has been done, right? We looked at some chart. I created one Excel sheet. I populated some data in that Excel sheet, and it's a straightforward Excel sheet, not very complicated or anything of that sort. There are no complex formulas or anything. And all that you did is you populated it, and you uploaded it, and it's done. So automation doesn't necessarily mean that you have to write some fancy code and things like that. You can do some very straightforward stuff also, and still make it much faster for yourself.
Hello, Naresh Murjani, please mute yourself.
Thank you, sir.
Sir, I have a query.
Yeah, please. Go ahead.
Yeah, sir, but what is the need for uploading 150 odd orders in one go at one time if
No,
we are
that
not
depends on how
high
much.
frequency trader?
This is not high frequency. It's most of the orders will not get executed because what will happen is, I'll tell you, if you are going to put positional orders like this, only 1 or 2 orders are going to get executed. Okay, in a day, right? So most of the time you will end up buying at some arbitrary price just because you're bored or because nothing is getting executed, you get frustrated and you put place some order. Okay, here you don't have any limits on the number of stocks that you follow. You should not be bothered really. I mean, they keep saying that you should have only 10 stocks in your portfolio or 5 stocks in your portfolio. That's up to you, how many you want. Okay,
Okay.
if you have only one stock in your portfolio, you'll either buy at whatever price there is, or you'll wait and have one order in a year, which is fine. If you're okay with that, you can go ahead with that. There's no problem. You don't need all this. If you are not fine with that, if you like to be more active, then you'll have to do something like this. If you want to make best use of whatever tools are available to you. And according to me, this is available to everybody. There's nothing, nobody needs to, I mean, learn programming or do something to create some simple automation. So if you want to trade in a way in which you are always safe, you reduce your risk to the maximum possible extent. That way, then there are tools which are available.
You need to keep that much money with a broker because you don't know how many orders will get executed.
Yeah, that is why that's exactly why we start in bits and pieces, right? So you need not put all the orders for REC in one file. You put only the first order in one file, the second order in second orders in the next file. You upload one file. If something gets executed, you upload the next file and so on. That depends. Of course, you'll have to keep the adequate margin. But this
apart
is
from
one
that,
of,
as you said, number of scripts and orders and things, risk management, it is our own personal choice, correct?
Yeah, it is your own personal choice. If you want to automate, this is one of the simplest ways of doing so. If you, there are two things in that. One is a need to automate. If you're doing very less trading, there is no need to automate at all. Okay, correct. But if you start becoming slightly more aggressive or more active, then you will need to automate it because you can't. Otherwise, then you are restricted to. There's one reason why you didn't automate is because you didn't know. Okay, and because you didn't know and you didn't automate, you are not able to be more active. That is one possibility. Why you are not very active, or why you keep sticking to only 1.5 stocks, for example. Okay, but you miss out on many things which may be at good buy zone. So because this buy zone theory, what will happen is you don't know which stock at the point of time is going to give you the best price to enter. Okay, and if it is not in your list, then you don't look at it. So there are various pluses and minuses for it. Yeah, you are asking something.
Yes, sir. Yes, sir. Can you go on the Excel, the quantitative application? Can you little again explain? Yes.
Yeah. See, so at any point of time, now of course the first one will always be equal to the average price in the first will be equal to the same price that you bought, right? Now in the next one, you have bought something at 95. Okay, plus you have bought something at 91. So your average price is going to be 95 plus 91 divided by 2 because you have bought 2, right?
Yeah.
So that gives you 93, which is roughly the previous price was 95. Now you are 93. So you are less than this price, the previous price.
Sir. Yes, sir.
Okay, now you're at 87. Okay, now you bought in 91. Now the price still goes further down. It comes down to 87. For example, just assume.
Yeah.
Okay, you get a line insert. Now let's take a chart itself. Now suppose you were here.
Yeah.
For whatever reason you bought something here.
Yes, sir.
Okay, then it came down. Then it came down still further. This is what we took it here. So we bought it here. Then it came down. So we bought again here. Now it comes down again. Suppose it came down still further. So we would have bought it somewhere here. Right?
Yes, sir.
So at this point of time, when you bought it
Yes.
at 87, my
Yes.
average price was 91.
Yes, sir.
When I bought it at 91, my average price was a little below 95.
Yes.
So my average price is just one step above the current price. That is what
Yes.
those quantities represent. So I buy so much, or I buy in that quantity, which makes my average price equal to the previous level, whatever I bought it at.
Okay. Yes.
So if I buy at 91, 95, my price is 95. If I buy at 91, my average price is 95 or less, little less than that. When I buy
Yes.
at 87, my average price is 91. So,
Okay.
so when the bounce happens, now,
Yes.
okay, now suppose you take, when I buy here, I would have bought somewhere here, somewhere here, somewhere here, somewhere here. Okay,
Yes.
in this, there will be 3 or 4 buys in this level.
Yes.
Now, when the bounce happens from here to here itself, because
Yes.
my average price is just here,
Yes.
as soon as the bounce happens, I am already profitable.
Yes. Yes.
Okay, and then I get profits all the way up to wherever it goes.
Yes.
But my risk is only from here to here.
Yes.
Or
Yes.
if it goes a little lower, then that risk increases. Okay, but at a point of time, my risk is only from here to here, because my price is just a little tad above the latest price that I've got.
Yes.
So the same way Excel you maintain for selling also, right?
Yeah, selling, though, there are different rules for selling. Selling actually doesn't strictly follow the pattern that the buy zones follow. There may be no peak in selling. See, at the point of selling, there was hardly any volume at all. Okay, so selling, what happens is you generally find some levels in selling, which are the last 3-month highs, 6-month highs, and all that. And so those levels, if they are reached, you at least should be selling part of it. So there are different rules for selling, whichever works for you, you could use.
And selling would also be a function of like how much profit you are making, and then based on that logic you want to sell.
No, selling is not like that. This thing is, if the level comes, I'll go with sell, regardless of what profit you're making and all that. I mean, the level will come, then you automatically make your profit anyway, because it's the profit which decides which level you're going to sell at. So if the selling happens, it automatically means your profit.
Okay, we'll see, because you were saying no, that it sells 11 shares or 1/3 of the shares at that price.
Yeah, that's what. So that is what the 30% profit is guaranteed. No, if the price reaches, then only you're going to sell. So your profit is anyway guaranteed. So I don't decide on whether I'm making enough profit. I predefine the profit levels and then sell. But it varies a little bit. Suppose my 30% is somewhere here, for example. All right, I will still sell it here because the sell zone is here, very close to my 30% level. So usually I say 30%, but it is the nearest sell zone to the 30%. But if we were here, say, somewhere here, then there is no sell zone within anywhere nearby. So then the 30% would have been whatever was 30%, I would have sold at that. So 30% is like a minimum. It can exceed a little bit if there's a nearby sell zone. You got that?
Yeah.
See, suppose my 30% was here. Okay, but I have a sell zone here now. We are somewhere here. I have a sell zone here. So then I would go a little above 30% and sell. Right, but I won't wait for this sell zone to come. The nearest sell zone I would have gone because it is closest to my 30% line. Now my 70% could be here. somewhere here, then I will not sell at this point. As and when it breaches this, then only it will be sold. Okay. So it is always you can go one step above but not below.
Ashwin sir, I have a query.
Yes, please.
Yeah, actually, while that uploading the data, whatever you have shown to us, what will be its validity? It is valid for a day or it will be forever?
No, that GFD is there. That field is there.
Okay.
There is that. Good for the date, no? Otherwise, you put a date here.
Okay.
So it will be good up to that date. Up to 1 month, you can put, I think, this.
Okay. Okay. After that, it will get expired.
Yeah.
Right?
After that, it will get expired. Or it also expires if the circuit limit is broken.
Circuit limit is broken. Okay. Okay.
So if it is below the circuit limit, then they auto expire.
Okay. Okay. Got it, sir.
But if you put a date here,
okay,
so it is good till date.
Good till date. Okay. Okay. Sir, second query is, suppose I have placed an order based on my file upload. Now, because I have put some date, for example, 2 days, day after tomorrow, right? But after at the end of the day, I go to know that I have to delete some of the executed files. I mean, some of the trades I have to remove. So that I have to done manually, or it can be done through that automation also.
No. See, if it is already executed, it will anyway delete.
No, not executed. It is there, but not executed till now.
Then you have to manually delete. The order will be placed. Yeah, because the order will be placed in Shetland.
Yes.
It doesn't know what changes you have made here.
Yes.
But for that also there is an option.
Okay.
You just simply suppose you want to change the rates or something.
Yes, sir.
Okay, you load another file with the change rates and say push order.
Okay.
Okay, and
then what will happen to earlier your that orders?
It'll change because you have to
modify.
New, you just say modify and say push order. It will change that order.
Okay.
Automatically.
Okay. So if it finds the same script there, it will automatically modify it.
Same script at same price.
Same price. Okay, got it, sir. Got it.
Okay.
Got it.
Sir, can you come again on that Excel sheet?
Yes, that is what I was. Okay.
Quantitative application. Quantitative application.
This one.
You were explaining the formula. Yeah, formula you were explaining, and it was break in between.
Okay. All right. So what I am no, I went to the chart just to explain the same. So now suppose the price has come down to 87. Okay, my average price becomes 91. So I calculate the quantity based on the average price.
Okay, sir.
So now if the price has come down to 83 and that is my next level, why I chose 3 is because 83 into 3 will give me an average price of 1 plus 1 plus 1 plus 3, that is 6 into 87.
How 83 came?
83 came from here, right? 83 came from this one.
Chart.
From the chart, from your buy zones. 87, 91. We just pulled it a little down so that it's the same sequence I carry on.
Okay.
You need not have every level. You can have only 1 level, 2 levels, whatever you want.
Yeah. Okay.
I'm just showing you how you can go into whatever levels you want. You want to buy 100 shares, you can put an order, 100 orders or 1 share each.
Yes.
Okay, it doesn't really matter.
Yeah.
But if you put an order which is below the today's circuit limits, it will
It'll
anyway
get rejected automatically. Get rejected. You don't have to bother about all this. Anyways, those guys will do their validation before they place.
Okay, sir. You can come on the Excel sheet again.
Which one? All right. So this is the way this quantity is calculated. Okay.
Yeah. Yeah.
So you have this for everything. I mean, there are so many stocks. Right from RIL. Okay. Of course, these are old levels which I was using.
Yeah.
I posted these also. So
Yeah.
now you just see from this point onwards where it is from.
And have you
This is,
received? Have you executed the order? It's 762, 797 of the RIL.
yeah. This was some way back, but
Yeah.
all mine obviously these. I think 800 onwards were got 869 also. I'm not too sure. 880 something was executed.
Okay. But many time on the lower price also we are not getting that stock. We have to shift to another stock on the time.
So that's up. I mean, that depends on what you're exactly doing at that particular point of time. What you're trying to execute.
Yeah.
So, how would you update the table when new zones are created? Like, let's say the stock goes up to 120 CPCL, and there are new zones which get created at 105 level, 110. So how?
Yeah, in this system, what you're seeing, you would actually have to do that manually. You'll have to create one more buy zone and create one more row out here. Okay, now suppose what is CPCL's price today? I don't know. Do you know what is the price today? 103, yeah. $95 is okay. So this is the way you'll do it. But that's because you're doing it in Excel.
Okay.
The algo will do it automatically. Obviously, it's a program. It has a database backend and everything. So it'll pick up automatically. But here, you'll have to do these things manually. But as you see, there's very little data entry work as such. You only change one little price somewhere. The rest of the things carried on as they were. See, now because the jump is more, this has changed. Automatically, it became 2 here. Instead of 111, now you have 112. So if you say invest 10, 10, 20, it would become then 40, 80, and so on. Now the gap might be more. This is some particular thing that the gap was something. It could be higher, lower, whatever.
So this means if when you are averaging on an upper side, then the initial quantity would always be the like whatever you decide, like the one can be 10 or maybe 100, whatever it is. But it will always take the lowest quantity when you are averaging on an upper side.
Yes.
Okay.
So if the price is continuously rising, okay, and you have an average price, maybe in this case of say 83, just assume that 83 is your average, and I have these many 32 or 320 or 3,200 share, whatever it is. So the next time if the price goes up and then I buy again, I would buy it. I would buy at this. I would buy half the. If I had 32, I would have bought 16 here, but I would buy 8. 800 or whatever to maintain that second row established. Always.
How to have this sheet when the share price is going up?
Whether going up, going down, it doesn't matter.
No, if in going up, if you put a say ceiling, it will immediately buy because the prevailing rate is lower than what you put in there. So
obviously,
and going down market is fine because you are giving a rate which is not yet there.
Correct. Yeah, going up, obviously, you'll have to check that what rates you're putting there. That's what in Excel there is a little bit of manual work that you have to do. It's still much less than what you'll have to do if you want to put in so many orders. Now there is always an option that you don't put in so many orders. You put in a single order and whatever price you get, you get. Be happy with that. That is fine. You can do that way. I mean, everybody already does it that way, so it doesn't really matter. We are just trying to find out the ways and means of making your making the entire system less risky for you, for yourself. So you have to manage risk if you are a long-term trader. If you are a short-term trader, your risk is limited because you'll have a stop loss, you'll have all sorts of things. In a long term, you don't have stop losses, right? So how are you going to de-risk your investment? So these are all ways of de-risking your portfolio over time. If you are going to like PAMI, you have a Prem Doshi, you have a stop loss, you have a target, you have a buy. If you get it, it's fine. Otherwise, you hit your stop loss, go on.
Got it, sir.
But here now there could be a COVID incident in the middle of you already have a portfolio which is sizable. And do you want to lose 50-60% of it within 3-4 days when you don't even have a choice? I mean, you can't even, if it hits a lower circuit and all that, you don't have a choice of even selling, even if you want to get out. Right. So how do you de-risk it? If you want to, as an investor, you have to think of de-risking your portfolio. As a trader, you have to de-risk one trade. As an investor, you have to de-risk your entire investment. So many years effort it might be. Right. So these are just tools to do that. Or you only trade. At the end of the day, you have a clean slate. Either you are profitable or you have made a little profit or little loss, and be happy with that. But every 3, 4, 5 years, you will find at least 7 years, roughly on an average, you will find a collapse of 30-35%. Okay, and that is an index collapse. Your actual portfolio might lose 50%.
Ashwin sir, sir, I have a query with respect to that buy zone.
Yeah.
Sir, suppose
just one sec before we change topic. Are there any other questions related to this?
Yes, Ashwin bhai, I have a question on this one.
Yeah, see, this price is decided by the zones or by whatever formula you want to use. I have no whatever formula you use, you have these prices decided by that formula. If you want to do a staggered buying.
Sir, how you created the zone?
How I created a zone? I showed you all yesterday how the zones were created. The whole of yesterday, 3 hours we spent in creating zones. You can check the video if you didn't attend yesterday or if you forgot.
Yeah. Okay, I will check the video. Ashwin bhai, I have a quick question on this one.
Yeah, which one?
Once we find the buying zone and we decide the staggering price, So until we move to the next buying zone, these prices remain same, or do we change it as the price goes up?
No, this never changes.
Okay, so once you decide the buying zone, this the staggered buying levels are going to be set, and we keep uploading the same file every day.
Every day, if the zone is there, if the zone is within reach, if it is this zone. Now there is a zone somewhere down here. That is not going to. You don't bother about that. You do it only with a 10% of the current price. If a zone is there, then you use that zone. Otherwise, you ignore it.
Okay. So if the zone is passed, then we do not to chase the current price. Just
so
to
now,
catch the price.
You never change the price. Whatever it is, come what may, you don't change the price. Now here, what has happened is you are 103. So 10% is 10 rupees less at least. Okay, so 10 rupees less means you are 93, right? So 96 is well within the zone, well within the stop. So it's okay. You can place the order there.
Okay, got it.
Now you can always use your discretion and don't place unnecessarily very low orders, because you'll be blocking your margin money unnecessarily.
Okay, so reasonable to the current price and the buying zone.
Where the buying zone is reasonably close, you can place it.
Okay, got it. Okay, thank you.
Now this is not true of only this one. It's true of any. I can always. This is true of any what you call that, any broker. You can always put an alert in a chart, right? So you can put an alert against a particular stock. So the price, as and whenever it goes here, it will alert on SMS or on something else. So you can start placing your orders at that point of time. That's also fine. So if you don't want to, but that is if you have access to the system throughout the day. I don't have to. So all these things were optimized for my own requirements.
That's become like a momentum buying, isn't it, Ashwin? So once if you put the trigger for the specific price level, so once you get that alert, so you will be buying. Do we need to upload
but
the
no. I am not buying at 103. I am placing my at say 95. No, so 96.
Okay.
So I am placing my price alert near my buy zone.
Okay.
But since I don't want to block my money, if I place it at 96 when the price is 103, the chances are most of the days it's not going to get executed.
Otherwise, it will block the fund.
You'll be blocking your funds unnecessarily.
Right.
So you can just place the triggers here, alerts here. Let the price alert you. As and when that price does get alerted, you upload a single stock. You can upload only for each stock. You make those many Excel sheets. Upload that Excel sheet.
Right.
Do something of that sort. It only makes things easier because you can quickly upload something.
Yes,
I mean, you can quickly upload orders very fast.
I used your earlier files. We used to upload 4 files in the beginning of the day.
Yeah.
Long back in 2016 or 17, you used to send these files.
Yeah.
I used to get it through Sidhu, and then Sidhu used to send me these files.
Yeah, true.
Thanks, Ashwin bhai. So the concept about the buying zone is very clear to me. So now I did not understand the volume and the coincidence of buying and buy zones and the volume. So yesterday, what you explained was very clear.
Okay, good. And this is how you create that price. Right. So So once you get the file, you upload the file. That's it. You wait. I don't know how many. One might get executed. 10 might get. Depends on depends of course on your the amount the margin you have and all this sort of things.
Yes, that's right. So even if there is no margin, also it get cancelled. So
Yeah. Anyway, so it doesn't really matter. Only thing is what
Yeah.
will happen is if there's no margin, then it's better to set an alert so that at least the ones which are close to getting executed, you use your little margin that you have for those. Not otherwise, what will happen is A, B, C, D, whatever stocks are there, they will exhaust all your margins, and after D, all orders will get cancelled.
Yes, that's right, Ashwin. So it happened with me earlier.
Yeah, earlier it would have happened.
Yeah.
Ashwinji, just like if you can share, like to select the stock, it is very important to shortlist the stock because we don't have like 1,000 stock in to go through. So like to start with, if you can recommend 5-10 stock, which we can start with the same kind of setup and formula, because see ultimately like more than a long term may we don't know like how the stock will go. So as you are an experienced person, so you can if you can
the intellect you can buy definitely for long term. IEX you buy for long term. It's a blind buy. ECS obviously.
On that same
so
thing we can apply this same
you
formula.
can apply this same formula on anything. It doesn't matter. You can apply this for anything, whatever you want to apply.
Okay.
It is absolutely no issues. I mean, you can apply this for Dixon. You can apply it for GMM. High price, low price, it doesn't matter. See, ultimately, what matters is what price you enter the stock. Okay.
Right.
You enter an absolute kachra stock like Marksans at 10 rupees, you're still much more profitable than buying GMM at 6,000, right?
Correct.
So, okay, that is a wonderful stock, the best stock. It has the strongest balance sheet in the whole universe. It still doesn't matter. Okay. What matters is what risk you took when you bought it at all-time high price. So, do you really believe that a stock will permanently remain all-time high all the time?
No, I'm not positive that.
Is it possible? Then how can you buy at 6,000 when they're very close to an 80th? So these are just, and you can buy it at 6,000 if you plan to sell it at 6,100. Then there is no problem. It will probably go there and you'll be profitable. Trading, you can always use these. Okay. But when you're investing, you're not, if you buy like that, you're going to lose your money. Okay. Or you'll be stuck for a very long time. I'm not saying that GMM will come to 6,000 sometime after 6 months. Yeah,
right.
maybe.
Correct. The sheet which you have shown the like this formulas, like is it possible to share that sheet? Because
I'll share all the sheets with you.
Okay, because I was trying to make the formula, but somewhere like I do a miscalculation, I think so.
No problem. I'll share both the sheets with you.
Okay, that would be really helpful.
The upload sheet as well as the second last algo sheet. Okay. Now, one more thing that I need to talk to you all about. Okay, now we have not really talked anything about sell zones. We have not discussed selling much, right?
Yeah, sir, that would be really helpful to understand the levels, at what levels to sell.
So selling, for selling, the problem is that most people buy for investing. The big guys like your Junjunwala and all these fellows, or even the FIIs, they don't buy and sell and buy and sell and buy and sell. They keep buying or they keep selling. If they want to sell and get out, they will keep selling regardless of the price. Okay, they will just hammer the price down. And when they buy, they keep on buying. So and then they don't chase the price, but they keep on. As soon as the level comes, they will buy a huge quantity. So what will happen in the selling cases? You won't see that spike which you see in buying. Okay, because the buying usually happens when the big guy buys a huge quantity sudden, or within a very short period of time, maybe few hours, 1 or 2 days, something of that sort. Okay, so when selling happens, you will find typically patterns such as the GRRR or GGRRRR, something like that. Okay, and whichever company you have, you will have these bands of tops which are created. Now here visually you can see very clearly that this is one band, this is one band, this is one. Okay, so you have these 3 sell zones. Right? I'll remove it from here. See, this is your one sell zone. All right, you would have sold here because this was your sell zone. You would have sold here as well. So that is why your selling should always be staggered. You should not sell everything all at once. Okay, of course, if you have only one share, you can't sell half a share. But I'm assuming you have some reasonable quantity, so you should sell maybe 10%, 12% at that point of time. You should always see to it that at least 50% of whatever you get, whatever is remaining with you, is free every time the cycle completes. So if you had bought here, say you would have bought something here, you would have bought something here, you would sell maybe 30, 25, 30% here, or actually 10% at 30. And then you would have sold when the next time, this was the first buy zone. So you, I mean, first selling, you sold here. But at this point of time, you would have sold, right? Then it went up and it hit this. So you create a sell zone here. Now this is another sell. Now it came up again. It again went down from here. So this is one more sell zone. So you have 2 sell zones very near each other. One maybe somewhere here. And one somewhere here. So now when you are in the next time, whenever the price touches between this, you would be selling. So you would have sold some quantity, small quantity, maybe 10% out here. And then you would have sold again another 10% or something out here. All right. Now, when it went up, it did not touch your sell zone. So you won't sell anything there. But it created a new sell zone. So you would have created one more sell zone here. Somewhere here, you would have created one sell zone. Right. So as and when now, if the price goes here, you would sell something. The price touches here, you would sell something. So you might sell here, you might sell here, you might sell here. Okay. Once you've sold, now let me mark this out. You sold here once, right? And you sold here once. When the price touched that. Okay, can you hear me?
Yes, you are audible.
Okay. Yes, sir.
Fine. Yeah. So you would have sold here, you would have sold something here, you would have sold something here. When you come to 5 or 10% below this price of selling, you buy it back. So whatever you sold here, you buy back around when the price comes to the next price one. So you would have sold it here, you would have bought it back here. So again, you have the same quantity that you started. Again, you sold here, you would have bought it back here. You sold still more here, you would have bought it back here. So what has happened is the price which you buy it here is actually reduced by this amount. So when you bought at 96, say, for example, buy it at 96 because it touched 96, and you're sold at 124. Okay, so your price is actually 96 minus 18 because you've already sold it at 124, or you sold it at 170. So that was yours. You would have sold at 124. You would have sold at 170. So 117 and 96. So you have a 20 rupees this thing. So your price that you bought here is not 96, it's actually just 76. Effective price to you is 76. Here again the same thing. It's almost 20 rupees difference. So you're going to have something like you're going to save 20 rupees on each of those, all the stocks that you sold, the entire amount. And you bought back the entire amount. So you still have this balance with you. You still have your original investment, but you made a little bit of. Okay, when you sold here, you might find, the price went up. I should have sold here and all that. That's not the whole purpose of this. The purpose is to keep. As soon as you get your price, you should sell. Be disciplined. Sell it off because you need to average your price down. Okay, now even though this is such a strong trend up, just see this. Okay, it's almost moving up vertically. So if you take a trend line, it was like this. You sold at possibly the worst possible time here, right? This is a very bad place to sell, no? Don't you think so? Hello?
Yes, it looks
Yes,
because momentum is there. So
Yeah, the momentum is there, everything is there. That point of time, okay, maybe you would check and then you think that this was a bad decision, whatever it may be. But you still got, there is nothing like the price is never going to come down. Okay, within 1 week or within 10 days, it has come back to the level where it was when you bought it.
Sir, if you just intellect, it is doing all-time high levels right now. So on that kind of momentum, how to identify the sale zone?
You don't have a sell zone for intellect. I mean, there is no thing that you have to sell something.
Okay.
Okay.
But the formula which you have explained, for the free share, if we do the selling then and then only that is possible.
So what will happen is, this is the only place where in intellect where you might have had a sell zone. This particular point of time, 703. Okay. Right?
Okay. Yes.
Now this was the sell zone. 480. All right.
Correct.
Now there is no buy zone at that level. At 480 level. Right? So even though the price did go down, so for those kind of, so actually when I have already sold, I'm okay with just at least a 3% gap in the price. You buy partially what you said. You don't buy the entire amount. If you reach a buy zone, then you buy the entire amount back. If you don't reach the buy zone, you just maybe keep buying little every day, so that you get that arbitrage. But now here there's a lot of indecisiveness. So many days the price didn't do anything whatsoever. And then again it reached your sell zone. Right. So I created a sell zone here. This was my sell zone which was created, right?
Okay.
This one. Okay, then the price did nothing. It remained below the sell zone. Now it has come here. It created a sell zone again. So I might have sold here. But then this was a bad sell because after that the price has never come anywhere close by the sell zone also. Okay, so that could happen. That happens also several occasions. Now it's okay. I have bought somewhere here and I have sold it here. I still make a little profit, and I have not sold all my share. I have sold a little bit.
So I'm reducing the cost of my rest of my shares. So this thing is fine for me. I have no issues with this. Now when it has gone up, you don't create. There is no sell zone created. This was the next sell zone which was created. Okay. So now this sell zone, when it is created, you will have to see that there is a buy zone here because of these things. Right. There is another buy zone here. So even though the sell zone has been created here, then it's not really a sell zone. There was no. This is a continuation of a buy zone actually. So though there are two red candles in the middle, it is green RRG. Right. The setup is like this: a green candle and followed by two indecisive red candles. Because it is not really. It is just. There's hardly any gap between the close and the open.
Right.
So there's no real. So this is not a sell zone.
Correct.
Okay, now the next sell zone is here because at least the price has come down a little.
It has broken the lower.
Yeah, but this sell zone, I have not yet. This was a sell zone. I have. It has not yet been. It was not reached. Then I came back here. Now this is a buy zone because it's a green RR green.
Volume
again. So I would have again bought here. Okay, and now when I come somewhere here, this sell zone has come back again. So I might even sell whatever I got here itself within 1 or 2 days. But that you can always check out the momentum and all that and decide whether you want to sell it or not.
Correct.
It is actually left to, I mean, you have that little bit of this thing, obviously. You can always upload or this, because I automate everything. I don't bother about all this. I don't look at the chart only, so I don't know. If you ask me what is the price, if you ask me what is Nifty today, I won't. I don't bother. Anyway, whatever it is.
Good. Okay, so
Sir, I have a question over here. So while plotting while planning for the sales zone, so supposedly, so do you factor time basically, or you have an indefinite time waiting period for your, stock to reach the sell zones? Just curious in terms of time value or, I mean,
yeah.
waiting
So in
period.
terms of time, that is why I'm saying that I don't. That is one of the reasons why I don't restrict buying or whatever to 1 or 2 stocks. Because if I buy only 1 or 2 stocks, I'll maybe, and if I'm going to buy 10 shares and 20 shares, 100 shares at a time, then it'll take. I'll have to live for 1,000 years to make a sizable profit. Right. So I always wait for the price to come. I never buy even 5 paisa. It will not be bought. If it comes down to within 5 paisa of the buy zone, it will still not be bought. I don't look at it anyway, and the algo doesn't care.
No, so I'm okay with I understood the logic for the buying. My question is on selling.
No. So it can remain for like that for 4 years, 5 years also. It doesn't.
Okay.
I mean, of course, 5-year-old buy zone is not going to continue. Obviously, you bother about the buy zones which are only maybe within the past 3 months, 4 months, or something like that. See, one more thing is there. There is something called a freshness of a buy zone. All right. So how many times has that buy zone? So once a buy zone is breached. So now, suppose this is the wrong stock to choose. Can I close this?
Sir, I have a question.
Yes.
Okay, let's take a normal stock which goes up and down. Now, this is a very easy thing to decide that this is a buy zone. Right? It was touched, it was created here, and then it has been touched here and touched. All right. So similarly, you have a buy zone here. Right now, it is at a buy zone. Okay, now repeatedly it breaks through and then comes, touches, goes up and comes, touches, and then goes up again. This is a good level to buy. 5161. 4678 is a good level. Now, Ameya's level was somewhere, not even here. It was somewhere here. 1800. Right? So this was a perfect buy zone. Just see how strong it is. So we actually entered somewhere here. Group members who were there present at that time. So now let's take the stock. Now all those levels are irrelevant because you don't expect it to come down to 1800 anytime soon, right? Anybody is waiting for 1800 for Bajaj Finance?
No, sir.
So if you're going to wait for it, then you're going to wait a very long time. So what will happen is you either go for many stocks so that at least something gets executed, or if you go for only fewer stocks, then you have to be as close to the current price as possible. So right now you're lucky that this guy is already on a buy zone. You should be buying right now. And the next buy zone is somewhere here, 4678. So these are the two levels which are important. Now this is not, so this buy zone was created here. So it was tested here and it was tested here again. And it still held good. So this is a very, very strong support that you get, 4675. Similarly, this has been tested twice already. But we don't know, it may still break down if the market doesn't rise. So we'll wait and watch. But right now it's on a buy zone. You should be buying it here. So I was explaining to you the freshness of the zone. So here it is a very fresh zone because it has never been touched. Okay, now here it is just touched. It has never been broken. So unless a buy zone is broken comprehensively, then that buy zone is valid definitely. But if the price had broken through and come down somewhere here, for example, suppose this had continued here somewhere, it had come down somewhere here or so, then this buy zone no longer holds good. Okay, so there is no freshness in that buy zone. As long as the support is taken and it goes back, bounces back, it is valid. Once it comes, if it had broken through here, then whenever it had turned, that would have been the new buy zone that you should consider, not this old one which is this. This is clear.
Yes, sir.
So now this is a sell zone. which was created previously, we would have sold here. You might have sold here also, but now this is broken. So this is no longer a cell zone. New cell zone is here or here, something like that. So if it was here, but so you might have sold again when it came here, but it broke through. So this would be an invalid cell zone. So now you have only this as a new cell zone, which is valid. Then you have this one. This is another valid cell zone, which has been touched but not broken here. So as long as it's not been comprehensively broken, that zone is fresh or it's still valid. Once you break through, you ignore that zone. Now zones such as these are going to be valid, but they are never going to really, I mean, you can't say that this is a zone which is relevant today. 1822 is a very strong buy zone, but it doesn't matter now. We are not going to quote that. So all these buy zones at 3000 something, all these they are strong buy zones, and you've seen how much the price has gone up from there. But you are not going to, they are not useful to you. You can't place orders at 3100 right now. And it is 5000 something. So the relevant buy zones are only the ones which are fresh and nearby. Relevant buy or sell zones. So in any particular zone, what you also need to find out is the strength and the two things. There's the strength of the zone and the freshness of the zone. The strength of the zone is after that zone was created, how many opposite colored candles were created. Were formed. So from here you had red and then green, green, red. So this is a medium strength zone. This is green, green, green. So this is a high strength zone. This is very, very strong. So this, though it's the same level, this zone is actually getting stronger and stronger. As we just see green, 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 5 greens are there. First there were 2 greens. Then at the same level there were 3 greens. Now at the same level there are 5 greens. So this is turning out to be a phenomenally strong zone. So at 4670, just blindly buy butterflies. If it ever comes. I mean, whenever it comes. I won't say if it ever, it definitely will come. This is a very, very good zone to buy it. Now, this is a continuation sequence, which is still continuing. It has been tested here. It again went back. It's again being tested. It might break through. If it breaks through, then the zone is invalid. If it continues and bounces back, then the zone is becoming stronger.
Hello.
Hello. Yeah.
Yeah, sir. With respect to the chart, it is quite visible that we can identify some of the buy zone and some of the sell zone. But how to do the same with respect to the data? Is it something related with the FFT?
See, when you get the data, now yesterday, I don't know how many of y'all were still continuing till late 1 o'clock. I showed you how to download the BOW copy, right?
Yeah. No, that I understood, sir. Point is, suppose I have a BOW copy and I have all the raw data with me.
Yeah.
Now, so, with that data, how I have to identify what is the buy zone? Is it with this something like I have to plot the FFT of whole data and then see which particular range is FFT plot is showing some spike.
See, in coding you can do many things. Whichever way you want to do, you do. Okay, you can plot the data. You can do several several things, but one of the ways is to find the average, moving average of the volume as well as of the what do you call that, of the price. And
Moving
then
average of the volume.
volume and the price.
Price.
Multiple of the price into volume. Okay, which is the amount being invested in that company.
Okay.
Right. So that is basic economics theory, no? That if more people invest, more people are buying,
yes,
and pump in more money, the price will increase. That's what is fundamental economics theory.
Right.
So demand is more, supply is going to be limited because there are only those many shares. So if demand is more, your price is going to go up.
Right.
And when the price goes up, supply increases because more and more people think that now it's worth selling. And the price comes up. So the basic demand and supply theory.
Yeah,
so,
but with
so
respect
this,
to buy zone,
so then when you plot the averages, moving averages, and you
yes.
suddenly see a spike in the average,
Okay.
you check what is happening to the price. So the
Right.
last 3 days what happened, and the next 3 days what has happened. This
Okay.
is always historic. You're not
Right.
to check what is happening today.
Yes, sir. Right.
You already know that something has happened. I'm looking at
Yes.
3 months data previous or whatever it is.
Yes.
So if I see this reversal in price, the
Mhm.
price trend was coming down. That is why I told you I use that first derivative, second derivative. So the slope of the line. So slope of the line is the P1 minus P2, P2 minus P1, right?
Right.
Upon T2 minus T1.
Right.
T1 and T2 are the time. So you're seeing a daily chart. So you're going to have time is going to be an integer, 3 days, 5 days, 10 days, whatever.
Right.
That is the slope of the line. So the difference in price upon the duration is going to give you the slope of that line.
Right, sir.
Now, if it is negative, if the price has come down, it will be a negative slope. If the price has gone up, it will be a positive. Time anyway can't go backwards.
Yes.
It's very trivial. It's very apparent in database. You can do it very easily.
Right.
Problem is only the databases are not very good at doing the sequential kind of. You can do everything in bulk, one shot, boom. It's very fast and efficient as a set operation. So you want to update 1,000 rows at the same time, it's fast.
Yeah, right.
You fetch one row, then you find the average, and then you fetch the next row, find the average. Then the database becomes very slow.
Exactly, sir.
If you're going to do that every day for 1,500 companies, it's going to take. So those limitations will be there. So you'll have to put it in a front end package in an array or something, and then go through and calculate all these things every day.
Okay.
And then once you do that, then you find automatically it'll give you the list of zones and things like that. But here you can actually check what is the current price and whether your zone is very close to the current price. You can raise the order, use the API and push the order.
Okay. Sir, another query was with respect to Byzone, there is some clarity, like with respect to volume, I can check, and whatever data interpretation I can do with respect to the data science and all. But when it comes for the cell zone, because now I cannot rely on the volume.
No, you can't rely on the volume. You have to rely on the price reversal only.
Okay.
Okay, so you are depending only on the price reversal for the cell zone, and you are going to depend on the highs and lows of the previous 6 months or so.
Okay.
Okay, so if there is a high or low, if there is a high which has not been broken, okay, then that is a available cell zone.
Okay.
This was a cell zone.
Yes.
Okay, till this guy came. You would have actually sold it, right?
Right.
Because this was the cell zone. So you this is later you would have sold here. This place you wouldn't have sold because you didn't know there was a cell zone.
Right.
Price was still rising. So
Right. It was first
you
time.
wouldn't have known. You would have sold here.
Right.
Correct. Now, what you see is that particular zone here has been broken.
Right, sir.
So this zone is no longer relevant. But
Right.
a zone here was created.
Right.
A new zone was created because the price came down after that. There was again a reversal. So there was a small little zone created, a little above the previous zone. Just it's maybe 100 rupees or 50 rupees above the previous. Right? This is a good zone because you sold here a little below, but the price went above, and then it came down. So when it came down, it touched your buy zone again. So you would have bought back what you sold here.
Okay.
Okay, you would have missed a profit only of this much. 20, 30, 50 rupees, whatever is there. Okay, but you made another from 471 to 52. So 500 rupees, you lost 50 rupees, but you made 500 rupees. Got back your shares out here. Okay, then it touched here. Now you won't have sold here because this is no longer a relevant zone. This is the relevant.
Okay.
About this. So you won't have sold here. You would have, but the price came down. It's okay.
Right.
Right. A new zone has been created.
Okay.
Because this is a reversal.
So it is something like we are creating the nearest that reversal point from where the new trend has been generated.
But now you think that this is a zone because there is a trend reversal, but it is very close to this zone, right?
Previous one.
Previous one. So since it is very close to this, these two will merge with each other.
So it's a range kind of thing.
Yeah. So it's a range between this and this. You may think of selling, right? So now what has happened is the price broke through. You would have sold a little bit. Okay, you would have sold here, and now you're, I mean, that position you have not yet filled.
Right.
So if I sell 10, see, I would have bought 10 shares here.
Yeah.
Went up. I didn't do anything. It came down. I realized there's a sell zone.
Right.
I sold maybe 1 or 2 shares here.
Yes.
Because this price was touched again. Okay, then I find that a new sell zone has been created. It comes down. I buy back the 2 shares or 3 shares I sold here. I'll buy them back.
Okay.
Then it goes up again. It comes down. This zone doesn't. This zone merges. So I have a broader zone out here. Then it comes here again. Again, I sell those 2 or 3 shares. Right. Okay. Then it goes up. It creates a zone here. A sell zone. It has not been sold. Nothing has been sold. Now I have sold those 3 shares here. So I'm coming here, come here again. Now here a buy zone has been created. Right?
Because of the reversal.
Because of the reversal. And there is a spike.
The spike is there. Okay.
So here the buy zone has been created. So I would buy. I won't buy right now. I'd buy when it's again. So at this point of time, I would have bought.
Okay.
This guy touched. Okay. But now what? I have actually sold 3 shares.
Exactly, sir.
Roughly buying at the exactly same price after.
Exactly.
All right. So, but this is a new buy. This is not. I'm not buying back what I've sold. This is a completely new buy. Now, if this price were to go down from here, down and hit this again, I would buy this back. 3 shares or whatever I sold here, I would buy back.
Okay.
This is the entire process.
Great.
Because this process, I mean, just imagine doing this manually for more than 20 steps.
It's impossible, sir.
It's just impossible. So what you have to do is you have to be able to at least partially automate, which is what I was trying to show you.
Yes, yes.
When you do it through an Excel or whatever it is, you have an entire history what happened.
Yeah.
Okay, so you know that I sold this at this point, so I have to buy it. So automatically, as soon as you sell, you take the buy zone and place the order in one Excel sheet. Create one order and keep it.
Right.
So whatever gets executed on that day, if it's a buy, you place a sell order, equivalent sell order automatically on your Excel. If it's a sell, you place an equivalent buy order, which
Buy
is
order.
10% below or 10% above.
Okay.
All right. So if you make this into a habit, then automatically it will automate and keep generating that 10%, 10%.
Right. Right.
Yeah. Then you can think of actually doing coding and making it even more automated.
Got it.
And it's not that this is the only strategy that works. There are several other strategies that will work. It's up to you to, I mean, I'm just trying to open your avenues kind of, so that you understand that these are the different ways in which you can. One way is, of course, to place an order manually, but that's not the only way. There are different ways. There are ways in which you can try out new things and try to. Ultimately, your aim is to not just make money, retain that.
Right.
It will be lasting wealth for you. So you should be able to buy it and then keep it.
Right.
Retain it. Of course, there will be some demonetization happens. You can't help.
Right.
Markets crash. There could be some other COVID happening. So many things have happened in the recent past itself, which are beyond the control of people, anyone. So however good your system is, it's not going to. So you need to de-risk as far as possible. If you have some bad luck and during one of these times itself you need this money very badly, you'll have to sell at a loss and then bear that loss, right? So this is just a way of trying to de-risk it. So whatever happens will remain in a profit. Maybe a much lesser profit than what you had before, but at least you'll still be profit. And we have seen so many stocks. Have you found any stock which has never touched again? Some zone which, except maybe Intellect in the past few days only. It will also come down. There is no stock on earth which keeps going up and only one way.
Yeah. Thank you, sir. Thank you.
Anything else you want to know?
When will you upload this recording to YouTube?
Recording I will upload maybe tomorrow.
Okay. Okay.
Today we've more or
Yeah,
less.
Ashwin bhai.
Bolo.
See, in coming next 1 or 2 year, which stock can give better returns in 3, 4, like LTI, LTTS, Intellect, or Reliance? So suppose the time horizon is for 2 years.
Intellect will give you. Reliance should give you.
Okay.
I would place it in that order. Intellect, Reliance, LTI, LTTS.
Okay.
That is my personal opinion. It might change. I mean, it might be different. But definitely, at least as of the moment, I see this order. It can change. But Reliance, definitely, you should be very, very bullish about Reliance.
So Intellect, Reliance, LTI, LTTS.
Yeah.
Okay, thank you so much.
But more than that, I would go in for, say, Tata Motors or I mean, along with, say, Reliance. These companies also are going to do very well.
Okay.
All the cyclical stocks, no? Tata. I mean, it's already gone up considerably. From the levels we posted, they are almost 2-3 times up. They still have some way to go.
Yeah.
Another 2x at least for all of them.
And for ONGC?
ONGC, see, ONGC and all the problem is the government.
Okay.
There is no guarantee. ONGC is by itself, it's a superb company, good management, everything is fine. You don't have a good government. I mean, you
Right.
don't have a good government in the sense they have their own priorities and all that.
their
which
own
don't-
priority.
and their priorities never match with the shareholders' priorities.
That's true.
So that is why it's not good for shareholders. It is for good company. It's good everything else.
Good for employees.
Whatever. It's and a good quality employees. They've got excellent management. Everything is good. The only problem is this
Management.
No, sir, not management, government.
government above the hand above the ONGC.
Yeah.
Right.
I mean, all other companies you only have to end at Anil Ambani. I mean, not Anil, Mukesh Ambani, Reliance. These fellows have to go to the chief minister, then prime minister, then somebody else. So anyway, you will.
What's your view on India Mart?
India Mart, I am not terribly. I mean, I don't hold India Mart. I was
Okay.
never very this thing about India Mart. It's overrated.
And Infosys?
Infosys, see, Infosys, the problem is
not Infosys, Naukri.
Naukri is one of the superstars of tomorrow.
Okay.
Naukri is by far compared. For example, if you compare India Mart and Naukri, I would expect Naukri to be 4 times of India Mart. Next to
And Naukri's price is also in buy zone now.
Yeah, Naukri. We can check Naukri. It's a good.
Yeah.
This is the buy zone. Obvious. This was a very good buy zone, but see, it was cracked. So it's no longer relevant. This is a relevant buy zone. It is broke. You should have been buying here, but now it is broken. Still, but it didn't break very badly. I mean, it didn't break down very badly. It's sort of bounced back. It might come down still further.
So our next buy zone will be 364774.
Buy zone. It's roughly the same price. Actually, the zone was created somewhere here. Not been reached. Touched again it's touched here. So this was the original zone. Then here, but of course, this is too low. So the chances of it coming here are low. Somewhere. The zone from here to here. So within these levels, if you ever get it, you should be buying. Right now, you should be buying. And there could be an intermediate buy here. But this is a weak zone. Zone is not particularly. It is still there. It's not been broken. So if you break this, then this will be the next level to buy, and this will be then this will be the major level to buy.
Yeah, good.
Hello, sir. Can you hear me?
Yeah. But it will be around. It should be a 10K kind of stock within next 2-3 years.
Yeah, it's a business are very profitable.
See, Naukri, any business has a raw material, right?
Yeah.
I mean, you manufacture something from a raw material. Now, Naukri has a raw material which is jobs, which is resumes, which people post online. So its raw
Yeah.
material is free.
Yes.
Money out of something which is free. It is selling something which is free to it. So it's paying nothing for the
raw material.
What it pays for is for managing the portal and the servers and things like that, which is hardly anything. In any manufacturing company, 60% goes into the raw material. And maybe 10% goes into depreciation of your assets. These guys are pretty much the same thing. They have a raw material which is free. So it translates that entire 60% what other companies usually get. It goes to profit. So the terrific business model. Just blindly buy it. And all its daughter companies also have the same thing, whether it's Zomato or Shadi.com or whatever. Profiles are free, restaurant profiles are free, and they make money out of it.
So how do you perceive the target price, like in next 3-4 years it is gonna hit, like for example you just said 10K.
It's
So
just a random guess.
okay.
I don't have any. I really don't bother about prices because I don't know the prices.
But in
Normally,
general also some people, like the people who are like actively putting their stuff on Twitter and everything, so they also give a target price very confidently, like in next 2-3 years it will hit the stock which is 500, trading for 100 right now will
somebody
hit
puts a
500.
target price very confidently, you should
Yeah, I should be like stay
100%
away.
sure that that guy has bought 30% below that, below the current price, and he wants to jack up the price.
Okay.
So whoever gets very confident high targets, usually a guy who would have bought very low. And he wants to increase his own profits, or he just bought it, but he has already bought it. Maybe at the current price or slightly less than that, and he is interested in jacking up the price.
Okay.
And as soon as it goes up by 500,000 bucks, he's going to sell off.
Yeah.
Those are generally done by operators traders, arbitrary, just random listing targets. They had all sorts of targets. No? The Nifty was going to go down to 7,000, 5,000, 3,000 also.
Okay, so there is no such predictive tool.
Who are you to be? I mean, how are you to decide? There's 10K, 15K, 25.
Yeah, exactly.
I can just maybe tell you for a few days that okay, this is going to touch. I can tell you the next buy zone it's going to touch.
Yeah.
The next sell zone, it is confidently I can tell you that. Maybe 2 buy zones up, 2 buy zones down. After that, how do I know what it is? If you have very good capex figures and things like that, then I can tell. Because we know roughly that okay, currently the margins are so much, now they are capacity by so much, so margin so much. Into the PE, I can find out what is going to be the price of, say, Deepak Nitrite or something. When I posted the Deepak Nitrite at 400, I told you, everyone that this is going to be 2, 3x, at least 3, 4x. It was among the 5x in 3 years, kind of.
Yeah.
So there were some stocks that I posted. Motherson, Deepak
Motherson,
Nitrite,
yeah.
and that is an understandable way of. I mean, it has some logic behind it. But a company like Naukri, how do you decide? There is no profit margin, no. I mean, none of the typical parameters that you use to predict can be used for this kind of company.
Okay.
It's a random guess. It might be 10K, it might be 12K, it might be 8K.
Yeah, got it.
But it's definitely better than, it will do better than what it is doing now. That is for sure. And especially if you get it at the 3,300 levels, you just blindly buy whatever you want to buy. Or you take a loan and buy it. just in case it does come here, right? It's a very, very good buy, but I doubt whether it will come here. It might at best come here. This buy zone. Any other questions?
Sir, just one question, not regarding the buy zone or sell zone, but I remember you were putting something about the NP2 EQ parameters, right? So is it means how we can find that NP2 EQ on charts, or that is fundamental parameter?
It's on charts. You can find it. You can find it in any screener.in or something. You'll be able to get it.
Okay.
See, in screener.in, you can create your own ratios. Okay, so when you enter screener.in, you create your own ratio, NP2 EQ, net profit upon the equity, net profit last 12 months upon the equity. That will be the NP2 EQ ratio. Then you sort it by NP2 EQ ratio. And typically, if you see some companies where NP2 EQ is more than 6 and P is less than 10, 12, something like that, those are very safe companies. You will definitely make good amount of money in those companies. Because if the market is by and large booming, those companies will definitely double, triple very fast. Since the P is only 4, 5, 6, you won't believe there are some companies which have NP to EQ 6 or 8, and then the P is still 4.
That's
Nahar
the best
Poly is
combination
one
we
of
could
them.
have, right?
Sorry?
That's the best combination we could ask for, right?
Yeah, but there are so many companies which have that. Now people don't buy it because they are kachra stocks. So, I mean, okay, if they're kachra, they're kachra. I have no, I can't prove that they are not kachra. But you can see the, I mean, Nahar Poly was a typical case. Its PE even now is 5 something. It's already become 4x from the price we had posted first time. Marksons was 10 rupees, can you believe? It's a NP2EQ is 10. 10, not 12. Something maybe less. So all these kind of stocks, if they're that low priced, then the risk is also very minimal. Entry. And ultimately, see, it's a percentage gain that you get which counts. Okay, Honeywell becomes from 40,000 to 42,000. Your money is only increased by 5%. Same 40,000, if you put in Marksans at 10 rupees, you're going to make a huge amount. You would have made to 2.4 lakhs within a short period of time. So the high value stocks don't appreciate that much. They are safer. Okay, but when the market is booming like it is booming now, you should be in these low stocks, because the risk is very low of any stock being beaten down. Whereas the gain will be much higher, since they are so low priced that they can't go any lower anyway. And if they are even going to come 1/4 of the way to what their true potential or true valuation should be, you still make a very, very big amount in that percentage terms. Make 300, 400% aram se in all these kachra stocks. The same thing if you invest in a kachra stock and the market crashes, then nothing will be left. So they are high risk. So you can't remain in kachra stocks for very long. You can, as long as the boom is there, take off, sell off, so that you de-risk whatever investment you have made in them and completely come out after some time. After
So,
4x, so okay, enough. You just come out and let it go to 8x, it doesn't matter.
hmm.
The risk keeps increasing. In kachra stocks, the risk is much higher.
So it is advisable to sell like in case in place like instead of staggered selling, like selling small amounts, should we sell more amounts in a kachra stock?
Which one? No, no. See, the kachra stock,
A
the
stock?
same way you do the staggered selling to get your money
Yeah.
back. Okay.
Yeah.
Now you might be keeping 50% of what you bought in the kachra stock for free.
Hmm.
That you can wait and sell at a lump sum 4x or 3x or something. Don't wait for 8x and 10x in a kachra stock. That's what
Yeah.
I mean.
Yeah. Okay.
It will go up 4x, 3x, 4x, aram se ho jata hai.
Hmm.
But at 4x, don't wait more than 4x. Okay. Then
Yeah.
you definitely have to get out of it. You become still greedier, and then you might see that 4x becoming minus 4x also.
True.
Because if when it crashes, these guys crash very badly because of the high beta. So that is why when it's going down, once you make your 3x, 4x, then you put it in HDFC Bank or something, Hindustan Lever, HDFC Bank, whatever. Nothing will ever happen. They go down 10%, they go up 10%. That's all that they do.
Sir, while placing orders, like, do you take into account an overall sectoral tailwinds, like, on the macroeconomic level? Because
Very
if
much.
any, okay, so then, so any light on how we can also affect it, so that we don't get trapped in terms of where we know that now there's going to be a slow moment, and the buy zone or the buy zone arrives, but the sell zones are not going to, be arriving any soon, need to wait and all that. So in that case, it's better to phase that out and invest that capital somewhere else, just to take a best
Yes.
opportunity.
So for that, you'll have to study what is called the commodity super cycles.
Okay.
They are there in Google, wherever, many places. Okay, so every 11 years or so, there is a super cycle of commodity, and a 7-year cycle which overlaps is the mini cycle. So within 7 years, the commodity stock will go from say 100 to 700 or something, and come back to 100.
Okay.
It will happen
So
with
I
Tata
believe
Steel. It
not.
will happen with all of these guys. So
It's not commodity specific too, right? It could be industry specific as well, right? I mean,
yeah, industry specific is less. The chances of something, see, COVID kind of thing, yes, because it will hit travel and tourism very hard. It will hit airlines extremely hard. Okay, so those kind of are permanently damaged. Some of them might be permanently damaged. Some of them will be fairly badly damaged. Like, for example, your Inox and PVR.
yeah.
Going to be damaged for quite some time. Just because the government opens up, people are not going to sit with somebody coughing throughout the
Right.
movie, Or, I mean, the person may not have COVID. It might be just a regular cough. But who is going to sit in that same auditorium in a closed area? So
I agreed. So COVID was an exception, like kind of a black swan event. So I
yes,
mean,
but it will
taking that
continue for a
outside.
long time for these sectors. So stay away from airlines, stay away from these guys. See, the problem with airlines is now when the oil prices were extremely low, COVID killed their business. Okay, now when COVID is going down, the oil prices are going up, that will kill their business. So these are sectors which are going to be at least not very profitable for quite some time. The same way you have hotels which will probably continue for another 6 quarters or so. They won't be in there what they used to be.
But then isn't there a view that these might be available at say lifetime lows also? I mean, there's both way, right? In case somebody wants to.
It is a lifetime low, but then a lifetime, lifetime low can become lifetime lower also.
Yes.
There's no
Because like
it's not negative. It will not go to minus or it won't go to zero. But it still there is if it is 400, it can always go to 300.
Right. So because before COVID strike, like the pharma sector was going through a years low. I mean, not as, I mean, it has picked up recently, but if you see a year or two back, in pharma was not giving that kind of returns.
Returns,
So,
yeah. So that is the kind of time when you should pick up for your long term.
Yep.
Okay. So, but if you don't stagger and buy, if you suddenly buy something and pharma doesn't pick up, then you're going to be stuck for a very long time, right?
Right.
So that is why the staggered buying is always a better option. That you test, unless you are that brilliant a technical analyst and you exactly know when it is going to turn around and take off and all that, then it's okay. Then you're that good. But most of us aren't that.
Right.
Predicting. So we do something which at least we are able to, or what do you call that? Get reasonable returns and good returns. There is no.
Yeah, Ashwini, what's your view on Sequent? Or
Just buy it, yes. Buy and forget.
Yeah, I have good quantity. Still planning to add more.
Just add more. As much as you can get, you can buy.
Oh.
If you want to buy more than the promoters have, that is also. Sequent is one such company. Intellect is another company. IEX. According to me, LTI and TCS both. See, I have one more ratio which I don't talk about very often, but it is used more than NP to EQ also. Is the price to NP to EQ.
Price to
NP to EQ.
Okay.
So if you compare NP to EQ is one thing, but then if you take price to NP to EQ, you get. What is the price to? It is better than P. It is effectively P divided by the face value.
Right.
NP to EQ is also EPS divided by face value. So it is just EPS, but per rupee EPS. It's not per share, because shares, something is 10 rupees, something is 2 rupees, 5 rupees, whatever. So there is not a, you can't compare 1 rupee face value stock with a 10 rupee face value stock and say EPS of the 10 rupee face value stock is more. Obviously, it will be more. The face value is larger. But then the NP2EQ will tell you exactly that is equal for all companies.
So you're saying
The
price to NP EQ.
Price to NP2EQ is what I use more often than plain NP2EQ. NP2EQ is used for the 30, 40, just for finding out a valuation, a spectral and all that. But to find out whether one company is better than another company to buy, I use price to.
Sir, as you mentioned earlier, so usually you check for input to EQ is greater than 8 and P is less than 12. So similar, is there any funda for price to NP to EQ?
No, that is only used. See, ultimately NP2EQ is the basis of finding out whether what category that share comes under. Spectral, that means it's kept forever, or it is buy sell. Yes. Like your NAR poly kind of thing. That will never go into the spectral category. So those are only meant for when they are undervalued, you buy it. When they have become, they still are undervalued, but they are less undervalued than they were, you sell it off and then put put the profit into the spectral companies. Spectral companies have to have NP to EQ more than 30. And there are 30, 40 of them who have NP to EQ more than 30. MRF is the highest, of course, but then even there are some other very good companies. All your top companies come into that 30 plus category. For example, your TCS is 80 something, LTI is 120 something. So if you see something like LTI, for example, 120 times the equity is their profit. So if you have an equity of 1 crore, they are making 120 crores as profit. Don't bother about the reserves and all that. All that will be generated from those massive profits. And because they have a very tiny equity. At least compared to the profits, the equity is extremely tiny. So even if they give 200, 300% dividend, it doesn't matter. The company is making so much profit over and above that. All of that is going to go into reserves, into more investments, capacity building, all those sort of things. So they're so flush with funds, right? They never will have to take debt. They won't. They can pump in money if they find a good opportunity. They'll buy out a couple of companies. So for long term, these are the companies that you should always buy forever and keep forever. So your very high NP2EQ companies are the spectral. What in that valuation report, what comes under spectral? So those are the companies which you can completely blindly buy anytime, literally any price. I won't suggest any price, but you can theoretically at least buy it at any price.
What all companies you said? TCS,
Yes,
Intellect,
LTI, MRF also, but MRF is already high price. MRF is not low
Okay.
price. Yeah. I mean, see, TCS is also a high. The price is quite a lot. But if you see CMP to MP2EQ, TCS is only 38. Okay, which is roughly the same as LTI is also 37 only. But these are roughly the same as say Indian Bank or some companies of that. I mean, where is the comparison between Indian Bank and TCS in terms of any parameter? That is the valuation which is being given right now to TCS. The same valuation what is given to Indian Bank. So blindly you can buy TCS, right? So the similar thing is with LTI. LTI is also even less than TCS. It's slightly less, 738, something like that.
I have LTI. Yeah.
Keep buying as much as you want.
What about banks? Any banks at a reasonable price, like RBL Bank or Bandhan Bank?
I don't know about them. Bank for me is HDFC Bank. Okay, I have one Kachra company called South Bank. I sold it, more or less sold it. Recently, it went up 20% in one day. But otherwise,
Kotak Bank.
Kotak is okay. But see, Kotak is high priced. It's not an undervalued stock. So you'll make reasonable returns, but you'll make average returns. You'll never make outsized returns in stocks which are overpriced or even fairly priced. You'll make the 20%, 25% returns that the market anyway gives you on the long term per year. You cannot make a 400, 500% return on Kotak.
Orient Electronic.
Orient Electronics, pata nahi hai.
And how is this Tata Elxsi?
Galaxy is great.
It's like LTI, keep for long time.
No. It is for long term, but you don't compare it with LTI.
LTI is much better.
Obviously, far better. See, in IT space, TCS, LTI. Then maybe in fee. Then.
So what are your views on HDFC Life versus SBI?
I don't think you're comparing. You're comparing chalk and cheese.
No.
SBI Life, you mean, right?
Life, yeah.
Whatever
Life.
SBI is SBI, PSU bank. So I mean, see, you can't compare it in terms of anything. It's probably a good company also. They work under too much of constraints. So all the time they will always be under that pressure. So
HDFC Life, it's
HDFC Life, ICICI Pro Life, you go with HDFC Life. HDFC Life, the equity is too high.
Yeah.
So it is not really. It's not an algo stock because the NP to EQ is not one also. That is considered as kachra by the algo.
But the buying what about the buying levels of it? Like, is it anywhere
That now
closer?
you all know how to set the buying levels.
Yeah.
So you should be able to do it yourself. Very simple. And this is a typical buy zone. This will be a buy zone. This was broken now. This one. Here it is just broken and come off. So it's still a valid buy zone. And I mean, you increase your range by this much. But you should have bought recently, maybe 2-3 days ago. And 670, 11, 675, whatever it is. No, this one. Low is 675. Around 675 is what you should be buying.
Okay.
Then if it breaks that, then the next buy level is here.
Yeah, 628. Yeah.
And if it breaks still down, then your buy level here. 560. It's a simple.
Can you repeat that buy and forget list you're telling? LTI wala or कौन now?
LTI, TCS, Mokri, Intellect, Sequent,
Reliance,
of course. For me, even Oro Pharma, but it's not one of the more popular stocks. That's another super stock.
Which one, sir?
Aurobindo. It's not one of the popular pharma stocks, but again, 93 NP to EQ.
Yeah, Tata Motors, the MOS.
Tata Motors, MOS, these are cyclical. So these are not buy and forget.
Okay.
These are buy and sell.
how about Bharti Airtel?
I don't like that guy. I mean, that's a personal opinion. I find it very distinct. And of course, it's doing well now. So, and they have taken on, it's a very resilient company in which they took on some challenge like Geo and still managed to hold on. So that's very good. The management seems to be very good. But, just a second. Hello. Yeah, I'm just about to finish my call. I'll start about immediately after this. Okay. Maybe in 15 minutes I'll send you that. Okay. Bye. Sorry, there's some work pending still. So I have to do it.
And this Balaji, I mean, also comes in buy and forget?
Yes, yes, buy and hold.
Bajaj Finance?
Bajaj Finance, yeah. Yeah, Bajaj Finance also, you can comfortably buy and hold it, no problem. But Bajaj Finance, you must remember to buy it. If you have bought it at a low price, then it's a buy. Not the current price. You can't say the buy and hold at current price.
What about Laurus Labs, sir?
Bogus lab. Lab is okay. It's not that. See, these guys have, they are doing well because of a certain, I mean, they are lucky. They've got a good break. They are making a good this thing out of it. And that's
CDSL?
See, the other ones which are low price but very good, very safe comparatively is EID Parry, Paul Merchants, Ramco Industries, Kaveri Seeds. ARBL is actually a good company, but over dicey hai thoda they have got into all sorts of political problems. So, actually very, very undervalued company, but then you don't know what is going to happen. Balrampur Chini, again, these are cyclical low valued stocks. Okay. So you have to get out of it reasonably fast if you want.
CDSL?
CDSL, nahi. CDSL is not. There is one company called Vijay Solvex.
Which one, sir?
Vijay Solvex. उसका ये मिलेगा कि नहीं पता नहीं. It's a very tiny equity is there. Face value is 10. So that will be like Jagdamba. You will hardly ever get any good quantity. You won't be able to get.
No, what you think? How much it can go? Because I have got some quantity, and
Which one? Vijay Solvex.
Yeah, and this company belongs to the same place, my native place, Alwar, Rajasthan. And I know personally them also. They are very rich people there, and almost most of the property they own in Alwar district. Yeah, the only problem is means it is not tradable. Means liquidity is very low.
You won't be able to buy it, and you won't be able to sell it.
Yeah, there's a big problem.
Because see, 3 crores is the equity.
Yeah.
Okay, out of that, promoters holding is
67%.
Oh my God. Yes. What is available now? And it's a 10 rupee share.
Yeah.
So it's not even a 1 rupee share. So promoters holding is 67. Yeah, 68%, 67.95%. So 68% is promoter.
And their
Nothing
main
is
business is mustard, mustard
all these
oil.
oils. Now the oil, if you go to the, if you see in the market, oil prices have doubled.
Yes.
You know, from 80 bucks to 120 or 160 bucks, something like that, 150.
And this Vijay Solvex brand scooter is very famous in Rajasthan and Calcutta
North
side.
India, that belt, it is
Mostly it go to Calcutta. They supply Calcutta side.
Mustard oil.
Yeah.
So that's our sarson ka tel.
Sarson ka tel.
Yeah. So but that is a very good company. If it comes, but you won't. The problem with these kind of companies is the float is so low. You will order 200 shares, you will get 2 shares or 5 shares.
Yeah.
then these are some of the really good. The lowest NP to CMP to NP to EQ, like for example, NMDC is 11.
Sir, I was just logged into the screener.in, okay, and trying to find out the NP2 EQ, but is it available only for paid version or is it also available for free version?
It is not. It is available for free version, but I don't know. I am not too sure whether paid version.
I think that ratio is not there, sir. We have to
No,
create.
you have to create it. You have to create it. If you, I'll stop sharing. You share and I'll show you how to make it. You share
Shall I
your
share my?
screen. Yeah.
Oh, okay. Yeah, just a minute.
Ashwin, I just created it. You can create it easily.
So it's available even for
Free version.
Free
Yeah,
version.
yeah.
Good.
Yeah.
So for example, are you able to see my screen?
Yeah. So go to ratios.
So it is EPS by face value.
So here, right?
Sorry, edit ratios. Go to edit ratios. Yeah, on the bottom, create your own. The bottom. Yeah, create new ratio. Yeah.
Just call it NP to EQ. Ratio is no unit. Okay, formula is net profit. Yeah. Divided by equity. Equity capital. Below. EQU. Just select that equity capital from below. Save it.
Okay.
Go preview. And just say NP2.
Okay, like this.
Yeah, so save it. Okay, so now you go to your screen, any screen that you have. You have created any screens of your own? No. Go to screens. Go there. Screens created by you. No, just use any one of these.
Okay.
Okay, now no. Go up. Okay, now edit columns here on the right next to it. Just add NP to EQ. May not be able to add. I think free version has some limitation of number of fields.
No.
Okay, no. Above it came, no, it can't. You can't add. It came. Something came above. Just go up. See, you can't add more columns. Okay, just go edit column. If you want to delete one of these columns, if you think that something is not good, then
yeah, it got added here.
Yeah, it got added. No, now double click on that. No, click on that NP to EQ. So now you see Honeywell is 52, Divis Labs is 30, 35. Now you just go down. Okay, now just remove all this query. Okay, now run a query NP to EQ greater than 6, greater than equal to 6. And P price to earnings less than equal to 20. No, less than, 20 or 12, whatever you want. Doesn't really matter.
Okay, so lots of big list.
That's it. So now you this thing in no. Just go back to that screen.
Sorry. Yeah.
Now double click on that NP to EQ. Make it by reverse order. Set it to reverse order. 91. See now Aurobindo is 91. No. Always take the higher ones first. Aurobindo is 91. P is less than it's just 15. Okay, so it's horribly underpriced. Jubilant, Coromandel is good. Chola Finance is good. L&T obviously. Sri Jagdamba is our one which we keep talking about many times. See the
Yeah.
NPQ.
Ashwin bhai, these stocks can you consider for the algo? These stocks.
Which one? All of these stocks are the only ones that I'll go consider.
Okay.
These are the only ones. I am not going to buy Honeywell just because it's a great company. It has to be undervalued to buy it for long term.
Okay. And other one you did mention like price to NPTEQ.
If it was 14,000, 15,000, Honeywell is a good company to buy, but not at 45,000. Then there is nothing, no appreciation which is going to happen.
So higher the NP2 EQ and lower the PE is the good stock.
It's a good combination. I won't say it's the best combination or anything of that sort. It's a good combination to have because the chances that these will appreciate is very high.
Ashwin bhai, you did mention about the price to NPTEQ ratio. How
You'll
does
have to
that,
create one more. You'll have to create one more ratio, and then he'll have to delete one more things, 3-month return or something. He'll have to delete and create these
can you
things.
just create the ratio, please? Can you create the ratio? Yeah.
CMP to, you can say CMP to NP2. Okay, short name you'll have to give without space. No, I don't think it may not accept that underscore. I mean dash. Underscore should be accepted.
What is the formula for?
Current price, CMP, current price. Yeah, current price, takes current price divided by NP2E.
Okay.
That's okay. Description you'll have to. Yeah, save it. See, this is what I told you. TCS is.
So Ashwin bhai, what is the value you are looking for this one to select a company? The ideal values for price to NPTEQ.
I don't have any such this thing that it should be less than this or more than this.
No, just to evaluate.
So you always sort them according to descending, ascending order, and then see which are the companies which are falling where they should be falling.
Okay.
Those are the things which are going to get you the real big returns. The big movements will come there. Okay, now run this query. Now sort it on. Now you don't have NP. You'll have to remove one more column from here. Now, now sort it on the lower to upper, lowest to upper. This one NP2, then ACMP to NP2. Okay.
Like this.
Yeah, like this. Now all these first 4, 5 are useless. LT Foods is why I keep saying I bought Dawat. Just look at this 7. All right, NP2EQ was 12, which 8, which is decent. 7 is very low. So it is very, very, very low. KRBL used to be, I just exited because they got into those political problems. Otherwise, it's a very good company to buy. Balrampur Chini, again, cool. Just blindly buy it. Safe as hell. EID Parry, always on the buy list, right? Every time I keep posting, I bought EID Parry. Aurobindo, KCP, Gulshan Poly. Now you understand how the algo keeps buying these Kachra stocks.
Yeah.
This is how they have become Kachra. So, okay. Dalmia Bharat is another. It's also a sugar company. NMDC is another one. Make Money is what I post as Make Money. No? Okay. That one. BEPL is Bansali. BEPL.
You usually post about this.
Yeah, Glenmark. SBI is another company, but I don't buy it now. I was buying it when it was 180.
Ashwin sir?
Yes.
This ratio CMP to NP to Q, greater is better or lower is better?
Lower is better.
Lower is better, whereas NP to EQ is greater is better.
Yeah, that is because CMP to NP to EQ, NP to EQ is below.
Basically, yeah, it's
divided.
inversely
It's
proportional.
inversely.
Yeah.
See, now you will also find what people keep saying they are these stocks are like KNR Construction, Coromandel, Manapuram, FDC, all of these are algo stocks. ISJEC, ISGC, so many times, no? Kaveri Seeds, I would have posted n number of times it as Bajaj Steel. All of them, you just see how low it is, the price, compared to 15 or 16 times the equity it's making profits. The price still doesn't really show. So,
Sir, like you are filtering as per you have told us that NP to EQ should be at least 6 to 8 for you. Then you will consider that company.
yeah.
Is there any criteria for the same for CMP to NP to EQ ratio?
No,
that
there
it
is
should not.
No, normally the valuation model anyway treats it automatically. So it's a redundant.
Okay.
I'm showing this to you because I want to show you how the algo doesn't use CMP to directly. Uses it in another way. I'm just showing you how easy it is, given the tools that you have, which everybody has access to. You can do whatever the algo does, or maybe a little less or a little more, whatever it is. But it is, you have all the tools available to you. You can do all this research by yourself.
Great, sir.
You find out all these nice little baby stocks which are trying to break out or trying to make it big. Okay, now what I will tell you is this, that even right now, many of these stocks, like just go up. All right, here you have, say for example, Balrampur Chini or EID Parry. Okay, right now the CMP to NP to EQ is, just go there, 9. All right. So just imagine, EID Parry was 118 rupees sometime recently, in June or somewhere, when I first posted it. 118, 140, something within 150.
2x, 3x now. Yeah.
Huh?
It is now
2x.
2x.
Everything is 2x, 3x. All right. But you just see the, now LT Foods was 20 rupees. It's a 3x. EID Parry was 100 and something. It is 2x. But there, this CMP to NP to EQ was 4. Because that was, so that is how the algos are buy. That is why I am saying Aurobindo is still extremely undervalued. Just see the CMP to NP2. It's 9. For a company that is, I mean, just net profit per quarter is 3,000 crores. Is it one chiller company? I mean, it may call Kachra on what basis? Every quarter it makes 2,950 crores profit. Right? So there is so much of company, so many of these companies are undervalued for no reason. Then suddenly when they become, now from 800 it becomes 3,000 people, or yaar, Aurobindo buy karo, Aurobindo mast company. When it was 800, nobody wanted.
Exactly.
Okay, Meg Money was 40 rupees when I posted it. It's 120 rupees now. Jagdamba was 115 or something. Absolute. So there's nothing. Bansali Engineering was 30 rupees. Now it's 5x. And all this is, you can just check the past posts. All of them are there right there.
Ashwin, do you post in the WhatsApp group all this trades, or do you have any separate group?
On algo trading group.
Oh, okay. I'm not in that group. Okay.
Okay, I post only on algo trading. I don't post any other groups.
Okay. Earlier I used to get an email. So that's what I.
That was a long time back. I was time.
Yeah.
करना है actually. I was planning to do it. Never get the time, and then since then I have refined many of the others.
Oh, right. Okay.
So I am spending more time now. PNC Infratech is another one in the same list. So when you see those lists which are which I am telling, I mean, when I keep mentioning, it is how much time did it take for you all to make this chart in something which is freely available? Okay, so this is how the valuation models trying out new things and then come up with your own model. I'm not
General
saying that
poly
mine is
also.
perfect or anything of that sort. It's just one of the models which works.
General poly went like 83% up.
Yeah.
Now, if you see, for example, just go down. Just go right down. Now just say that NP2 EQ is equal to and price to earning is less than 200. You'll get all the companies. Just make it 200. No, is NP2 EQ is 8 is okay. Just make this 200. Run this query. Now, 1 second. It's just 3 pages long. Previous query was 3 pages. Now it is 6 pages. All right. So only you have increased the price to earnings 10 times.
Right.
All right. But you still have not, your number of companies has not increased 10 times. Number of companies have just doubled. Okay, now you go down to, you reverse this NP2 thing. Just reverse the CNP to NP2. Make it ulta. Double click on it. See, now this page industry is 1,315. ST White is 1,000. Honeywell is 870. India Mart is 800. Nestle is 700. All these are, they're either fairly priced or they're overpriced. I can't find anything better about page industry than, for example, TCS. But TCS is 38 and this guy is 1,315.
So can we say that this is also the good price right now? Because NP2, this one, Gillette or Bobco.
Why would you? This is 600. Yeah? For every one NP2 EQ value, you're paying 690, right?
Okay.
You're paying 38 for TCS. Now,
So
in
better
what way is Wabco better than TCS? You can.
Exactly.
You tell me one parameter in which you think Wabco is a better company than TCS.
Ashwin, I think they're confused with the CMP ratio and NP2. So NPT to equity should be high and CMP to NP2 ratio should be low. So that's what you need to look for.
Yes.
Okay.
Yeah. So if
that is a combination.
The more this becomes, the more higher it gets, then it's time to sell these. Okay, because from 1,300 is not going to become 2,500. And even if it becomes 2,500, it's only going to give you 2x. Okay, so 30,000 say like a 60,000 poach gaya, so you will get 2x.
Correct.
Right? And the same 2x you can get in TCS from 2,000 to 4,000. And there's no way TCS is an inferior company to Page Industries or Tasty Bite or Honeywell or anybody else. So this is how the valuation model works. Okay, you compare everything. Don't just some arbitrary balance sheet is strong. This is good. That is good. Okay, that is all fine, but that doesn't justify the price. Or
Sachin
even
bhai,
if it does justify the price, then there are other companies which justify a much higher price than what they have right now. And you are trying to look at buying low and selling high. Right. And if you invest in Testybite or Honeywell, you are buying high and selling higher.
इसमें margin of safety बहुत कम है अर्जुन भाई, as you said.
Margin of safety एक तो नहीं है, and दूसरा तो 2x 4x होने वाला नहीं है.
हाँ, that is true.
20% मिल जाएगा. I am not saying it is going to Honeywell is going to come down from 46. Okay. Now you see what happened in the last 3-4 days. It dropped 700, 600 points. कितना गिरा?
Which one?
The market went down, no? 3-4 days.
Yeah.
Went down by how many points?
It came around 7,049 to 42, approximately.
Sorry?
It came down from 49,000 to around 42,000.
Okay, you're talking about Sensex, yeah?
No, not Sensex, price of annual.
49,000 to 42. So
Yeah.
15% drop ho gaya.
Right.
All right. And what was the market drop by? I mean, index drop by Nifty dropped from 15 something to 1450, 14,600, 7. I don't know, but I'm
It
just
went till 14,200 something.
14,200
Mm.
from 15,000 something, right?
Yes, correct.
Okay, so it went down 800 points. Okay,
Yeah.
now you see the difference between any one of those low underpriced stocks, no, the 38 types. They would have moved 1 or 2%. Whereas all these guys are the top move 15%. So that is also a myth that these are stocks which never go down, that is all bullshit. Okay. So when you are buying high price stocks, you be ready for volatility. They are more volatile. So the more the NP to CMP to NP to EQ, the more volatile the stock is going to be. If you buy it at P100, it will come down to P50 without any change in profits or anything else. Because if the market cracks, those stocks crack equally big. The thing is, they recover much faster. As soon as the market recovers, they will be up and running. Or they might lead the recovery, which doesn't happen in these kachara stocks. They take their own sweet time to recover. But they don't really fall in the first place that bad. If it's a sustained fall, the market really cracks for several months, then they crack really low. Okay, so every stock specific, you have to have a strategy which is stock specific, literally. Which is why I use a computer to do all those things. You can't have one standard method for all kinds of stocks. So I showed you a little bit about how the valuation model works also, and all how the buy zone concept works, how the second lowest price concept works. Any other questions? Otherwise, we can stop. I have some work to do.
Still, you have work to do when you will sleep.
The call came. No, there's some data they want.
Okay. Yeah.
1:30.
Great works. Thank you so much.
Thanks a lot. Okay.
Thank you very much, sir. Thank you for your time.
Good night.
It was really good.
Thank you, Simon.
Thank
Thank you.
you, sir.
Thank you.
Thank you. Good night.
Thank you.
Take care.
Good night.
Thanks a lot, sir. Good night.
Thank you.